How do tax lien sales work? Welcome back. Today's episode is answering your question, how do tax lien sales work? To start with, tax liens are more formally called tax lien certificates when they're sold at the auction. These are the preferred investments for newcomers or people that want to invest and they don't want risk. Why are they low risk? Because number one, you invest with the county, and when you invest with the county, they hold your money until such time as the people pay the tax, and then they'll notify you, and you'll send your tax certificate back to them, and they'll put money in your account, all of the money you invested, plus the high interest rate. So the tax lien is a result, actually, of a consequence of someone that owns real estate not paying their property tax on a home that they have, or a farm, or a small office building, or residential lot, whatever it is they own. They didn't pay the tax. The consequence is that in half the states, they're going to issue a tax lien certificate. In the other half of the states, they're going to confiscate the property. So non-payment of property tax sets off an alarm at the local treasurer's office, because that's who collects these taxes. So if they haven't paid the treasurer is going to put the property in default, and from time to time, they're going to start sending notices to let that property owner know they haven't paid their tax, and they're going to either confiscate the property, and that's in the case of a tax deed, but today we're talking about how do tax lien sales work. In this case, they're going to issue a tax lien certificate. So that simply means that the treasurer is going to notify them. So that's the first step. Later, the treasurer is going to sell that property by not selling the property itself, by selling the tax lien certificate. So they won't sell the property, they'll sell the certificate, and then that certificate, the person that buys the certificate will hold that for the full length of the time, or it can be paid off at any time. All right, so the point I'm trying to make is tax lien certificates are going to be issued in half of the states in the United States. That means half the counties are going to issue them. Now, how does this all come about? It comes about because the legislature gave every property in the state a number. That number is a tax number, and that means someone has to pay the tax on that property every single year. All right, now the legislature runs the government of that state. Now, what does that mean? That means they're going to tell Board of Supervisors and the county commissioners, they're going to tell them, you must tell the treasurer they're going to demand it, that they levy taxes, collect taxes, and if they can't collect the taxes, they're either going to issue a tax lien certificate or they're going to confiscate the property. It's going to be one of those two things. That's going to happen in every state in the United States. So the property owners are required to pay property tax, and the treasurer is authorized to confiscate the property, or if they don't do that, they'll issue a tax lien certificate. So half of the states will seize the property, the other half of the states will issue tax lien certificates. All right, so we're talking about what happens with tax lien certificates. How do they work? Well, first of all, the legislature authorized it to happen. The treasurer makes it happen. Anybody that doesn't pay tax in a tax lien certificate state will have a tax lien certificate issued. All right, once it's issued, it can be sold to any member of the public at a public auction. That can be done on the website. It can be done in a public auction. It can be done online or offline. So the county officials don't want these properties. They don't want the tax liens. They just want to get them sold so they have revenue. They need that revenue to pay the school teachers, pay the firefighters, to pay the police department, and pay all the county employees. So they want to sell those tax lien certificates. All right, so that's what pays the county's obligation. So property taxes pays all the bills for the county. All right, now in paying bills for the county, if people don't pay their tax, the county's in trouble. So to stay out of trouble, they sell tax lien certificate. This is a safe, secure investment. It's safe because you can invest with the government. It's secure because it's secured by the property. If you don't get paid, you are going to get the property. It's the rules, it's a promise, it's a covenant from the county. You'll either get paid or you'll get the property. That's a nice investment where I come from. All right, so the states that sell tax lien certificates are what I call benevolent. They're very lenient. And what do? Well, they sell the tax lien, but they don't push the people off the property. So those people can stay on the property sometime for 2 or 3 more years. All right, at the end of that period, if they haven't come forward and paid the tax lien certificate and all the penalties and all the interest, well, then they're going to lose the property. All right, they'll lose the property. In most places, they'll lose the property to the tax lien certificate owner. All right, so anybody that buys a tax lien certificate is either going to get the property or they're going to get paid. Probably 95, 98%, some number like that will get paid. They'll get 100% of their money back plus that high interest rate. Now, Florida does it a little bit different, but the example is if you raised your hand, you're bidding on the tax lien certificate, all right? So you'll pay the full value of the certificate, and what you're bidding up and down is the interest rate, and I won't go into that right now, but there's a down interest rate in Florida. Maximum Florida would pay would be 18%. All right, so the property owner, if they remain on the property and they don't pay, what'll happen, then the property can be taken over by the tax lien certificate holder. All right, now tax lien certificates pay outrageous amounts of interest. What do they pay? Arizona, 16%. Florida can pay up to 18%. Iowa, 24%. Illinois, 36%. And all kinds of numbers in between. Only named those few, but you're getting the idea. So half the states sell tax lien certificates. If I say the states sell, it means all the counties within the state will sell the tax lien. All right, now different rules apply in different states and in different counties. Now, there are little nuances to the rules. You have to know the rules. But from an investor standpoint, this is a safe, secure investment. The investment is directly with the county, and when the people come in to pay the tax, the county will pay the tax lien certificate, and they'll pay you the high interest rate. But the person that owns the property must come forward to pay. Meanwhile, the state's been very lenient, very benevolent, and let them stay on the property. Now, many certificates are paid right away. Some certificates will go the whole 2 or 3 years that the county allows them to go. So I don't know which it'll be, but in both cases, it's usually a pretty darn good investment. How will you know about tax auctions and tax lien certificate auctions? They'll be on the county website, and they'll be published in a local newspaper. That's free information to everybody. All right, so the biggest question that usually comes up about tax lien certificates is number one is what? What is your security? Your security for buying that certificate is the county says if you buy the certificate, you'll either get paid back from the county when they collect their money, or you'll get the property. So your security is the property. So you have basically two promises that you're going to get paid. One's from the county and the other one's from the property owner. If their property owner doesn't pay, in most cases you're going to get the property. All right, so that's a covenant that comes from the county. I don't make those rules, the county does, and those rules prevail in all the tax liens and tax deed states. All right, now I'm not an attorney, I'm not a CPA, I'm not a financial advisor. I'm an author and a person teaching you about this. All right, to find out all the legal stuff, you go to the county records, okay? They'll be listed, all the rules of the auction, and they'll be on the state website, or contact an attorney, a title company, or a professional advisor. All right, so most investors don't have a lot of experience at these alternative investments. So what are they? They're nervous and they're worried, and they want to be assured they're going to get their money. So the government issues the certificate, and they explain to people when they issue the certificate that if they don't get paid, that they will get the property. Now, that's the way it works, and I can't change that. You don't want to change that. That makes it a nice, safe, secure investment. Again, I'm not an attorney. I'm not a legal advisor, so I'm not giving investment advice or legal advice. I'm an author and a publisher, and I'm trying to, best I can, explain the process so that you can learn how to make money and do this. Okay, now my name is Ted Thomas. I've run out of time. Right below me, if you're interested in an auction list, right below me, you can get a free auction list just by registering. I'll see you on the next video.